Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. This is our weekly 2 cents segment. I'm Pete Wargent. I'm here with Chris Bates. Batesy, how are you?
Life's good, Pete. It's last week before Christmas. I got my birthday in a couple of days. Exhausted, ready for a break, but doing well. How's things going over there?
Oh, we're absolutely flat out trying to get everything finished before Christmas. I've sensed that other people are winding down for the Christmas break now, but not us because we've just been at full capacity the last few months and trying to get as many properties over the line as we can. It's a difficult time of year to get people to respond quickly, but we're trying our best. Foot to the floor all the way through for us. But I definitely get the sense from speaking to people around the traps that a lot of people's minds have moved on to more festive activities, and who can blame them? So, it's looking forward to the break. Thanks for joining everyone today. Every morning at 7 a.m, you'll get our 2 cents podcast episode waiting for you in your podcast player. And we basically cover the big three property news stories of the week. So, Chris, there's been a bit going on, hasn't there?
Yeah, absolutely. And I've said it multiple times on this. I think that buying's going to happen all the way up till Christmas. And I actually think January is going to be really busy. And we've seen that. We've had 6 clients buy in the last week, 3 on the weekend, 3 at the start of this week. And lots of clients, even clients going to auctions on Saturday this week. It's right up till Christmas. And even just going around my local area, and I track all listings, locally, there's a lot of sold stickers going on, the average stuff, to be honest. People are meeting the market. They don't want to see their property sit on the market over January and become stale. And buyers are also a little bit, agitated, I guess. They're wanting to make a deal happen because they not, that waiting period for a couple of months. People have been burnt there quite a lot in the past, where over that period, more and more buyers enter, but no properties enter the market, and so that demand supply seesaw starts to get a lot more demand on the seesaw and not much supply. So you can see how that really counterweights, and it can potentially surprise the market in February, and the market can come back much stronger than it was just 6 weeks ago. So I'm not saying that's what's going to happen, but we are on all-time low listings, particularly in the housing markets. Unit markets not the same, but and I do think the buyers are there. They're getting more and more confidence around the rate story longer term. Yeah, they're a bit more concerned that rates have gone up a bit, but they're still willing to meet the market, particularly because the rental crisis has, doesn't look like it's going to go away for some time. So let's have what's the big 3 stories this week, Pete? Always looking forward to this chat.
Yeah. So first one, Rozelle interchange disaster. You might have seen this whole slew of articles covering this. The West Connex was a multi-billion-dollar motorway project, so they were supposed to make Sydney run more smoothly. Doesn't seem to be playing out that way so far. So a few different stories that spin out of that in terms of demographic trends and so on. Secondly, petrol prices fall 30 cents at the Bowser. Well, that's a really good piece of news because we haven't had much over the past 15 months or so, probably 18 months in terms of inflation. And also the Fed in the US starting to pivot suddenly. So possibly sort of better days ahead, I guess, for interest rates after a punishing year or so. And then thirdly, a bit of a population growth pushback emerging, not just in Australia, also in a number of other developed economies like the UK and elsewhere. So definitely it's become a political issue, something we flagged actually a few months ago on this very podcast, and it is sort of hoving into view. We'll take a look at what changes have been proposed and what they actually mean for the housing market. So, Chris, let's start with this Rozelle interchange shocker. So I guess, the West Connex was, it's a multi-billion-dollar project that was pitched as being a sort of a game changer for that part of Sydney, but it's been a bit of a disaster so far. We've got real pinch points which have been creating huge commuter delays. I saw Rebel Wilson actually caught the headline because she had to jump in a helicopter to get into the city for work one day. I think the really weird thing here is that, we keep reading that offices are only running at 50% capacity. And yet here we are with these massive traffic delays, and I saw they're looking at trying to extend an extra couple of lanes in there, which I guess is a short-term fix. But it does sort of raise the question, Chris, if we can't function when the offices are only half full, what is going to happen when Sydney grows to 6 million or 7 million and 8 million? I guess, we talked about maybe a year or two ago on various podcasts, is that the global experience seems to be when cities hit that sort of 5 million level, which Sydney and Melbourne both have now, suddenly shit just stops working. All the infrastructure starts creaking and it just gets a bit less livable somehow. And it does seem to be that way.
Yeah, I mean, I do think this is one of the stories of the good old Aussie jumping on the bandwagon. And, a lot of people hate roads. So they're loving it right now. They're like, why are you designing cities for roads? People are going to use it. So you got them jumping in. I mean, I was at multiple fourth birthday parties last weekend, and it was the talk of the party. Is what's going on there. And I said I drove on it. I haven't driven on it yet, but I was asking other people who have driven on it, etc. I read an interesting article on this, and they sort of said it's doing what it's meant to do. It's meant to funnel traffic. It's if that's too difficult, then people go other roads rather than funneling everyone into the one road. And there's always going to be teething issues with change. People don't like change, but I think they will resolve it. Ultimately, we are going to need to invest in infrastructure, and this is a huge project. I think once it's up and running, it's kind of like the Cross City Tunnel. I remember back, I think it would have been 2005 or something like that when I first moved to Sydney. And everyone, I'm not using that. I can just drive through the city. Because it's quicker. I'm pretty sure people don't make that choice anymore. They go through the Cross City Tunnel and pay the few dollars that it costs for that. So, I did have a friend who used it actually, and she said it was an amazing experience. Google Maps sent her that way because I think the city was busy and we're coming down the south coast. And she said it was just an awesome experience. So she didn't have to get into the city. So, I think it's just it's one of these things. As we get bigger, we're going to have to keep on using infrastructure, but that doesn't mean that it just solves all challenges with travel. I think it's a bit optimistic to think that we still, aren't going to have no traffic. There's still going to be challenges.
So as a result of the new junction, we've now got 10 lanes of traffic that basically funnel down or merge into 4 lanes by the Anzac Bridge. And I guess there's no easy fix here. I guess the concern is when the Western Harbour Tunnel opens in a few years' time, that's just going to make things even worse. That's probably a few years away. I must admit, those tunnels freaked me out a little bit. I saw there was a news story this week. The Elizabeth line in the London Underground broke down and people were stuck in one of those trains in the tunnels for a few hours. I was thinking, oh, gee whiz, I would hate that, But I guess this is the thing. There's no sort of easy fix for traffic congestion unless we just find other ways for people to get around. I think the thing that sort of caught my eye when I read this sort of story, Chris, or there's multiple articles on it, is that we've also seen in the past week or two the New South Wales state government talking about rezoning all of those areas close to train stations. And that, last time around when we had the big construction cycle, the traffic was noticeably worse after all those apartments got built. Most people have one or maybe sometimes 2 cars, with each new apartment. And it, if we're going to go through this, building 1.2 million homes in 5 years, which I can't see happening, by the way, but, even the target of that is only going to make the traffic worse. So what does it mean for the way in which people try to live? Because, people are complaining about trips on the Eastern Distributor, the Cross City Tunnel. Now we've got the Rozelle interchange, which looks like a bit of a shocker, although they're trying to add a couple of extra lanes. Are people going to want to try and find ways to drive less? I assume they will. But what does it mean for the popular areas to live? Are people going to cluster around the train stations in units? Are they going to try and find jobs where they don't have to go into the city? What do you reckon?
Yeah, I think this whole work from home battle, I think the power has absolutely swung to employers right now, and they're mandating days back to the office. But, you can see where housing choices for families are going to start getting limited again because there's just not an option besides moving further away from the city. the employees are gonna really demand flexibility. I think, particularly if the job market gets tighter again and the economy starts booming again. And so, yeah, I mean, I thought it was the irony of it all, right? So you've got this spaghetti junction issues. The current population can't get to the city, but then in the same week, the state government announced that the Bays West, which is on the metro line, which is bang where this issue is, has got a 1.2 kilometre radius around it that now can be high rise. And if you put a circle around that and that station, it's pretty much half of Balmain, which I just can't see turning into high rise, to be honest. I think the heritage overlays will fight that. But apparently the rules are that heritage overlays, don't really matter. There will be that did matter in the past, but this overrides that, and potentially, beautiful houses on beautiful streets are going to get knocked down for higher density apartments. I think that's going to be an interesting one to watch. But yeah, absolutely. I think this is as a city grows, getting access to public transport becomes more and more important if you need to get into the city, and that's the people you want to own your property. Because they're usually the ones on the higher incomes, generalizing here, and they're usually the ones who are going to have the biggest borrowing capacity. So I was chatting to a first-time buyer listener on this podcast just a couple of days ago. They were looking at a cracking apartment, actually, so well done to them. They, an older apartment, inner west, north-facing courtyard, good-sized rooms, a big block of land with a small number of units, quieter off the back street. So a cracking apartment, but it wasn't, walkable to the train station. So we just said, look, how would you get to the train station? So, you can get a bus. How easy is it to get to the bus stop? Oh, it's only a 300-meter walk. Okay, that's good. How often does the bus come? It comes every 5 minutes in the morning and 5 minutes at night time. And how long is it on the bus? It's under 5 minutes. Okay, cool. This is no problem, even if yes. And the reason why this is okay is because, around the train stations, you're going to get a lot of high density apartments. And so this was far enough away where it's not going to get upzoned, but also you can easily get to the train station on a bus, and there's a bus stop just down the road, and so that's a cracking little apartment. That's, and so, yeah, I think you got to be really strategic, because I think that over the last couple of weeks, it's been an eye-opening experience to say this is the way the city's going to have to evolve. We're not going to really slow down our population. Sydney isn't full. We're not going to say no more. We're going to grow our population, and we're going to do it through higher density.
It is coming. Yeah, I remember when I worked in London, nobody used to drive to the office. In fact, nobody used to drive anywhere. People would just try and cluster around the tube stations and get into work. Interestingly, it still used to take people 45 minutes, it seems. It doesn't matter where you live. It was always a 3/4 of an hour journey, but very few people bothered driving. And actually, a lot of people didn't bother owning cars either. So, yeah, maybe a little sneak preview of what's coming for Sydney. So we've got some good news. We haven't had much good news on inflation over 2023, but as the year draws to a close, maybe a bit of a Santa Claus rally coming for the stock market. So second story of the week, petrol prices fall 30 cents at the Bowser. It's funny, whenever I make note of this sort of thing on Twitter, I immediately get people respond and say, well, I'm still paying $2.20. But I guess that these are the statistics across the country. So oil prices are down 27%, $67 a barrel. So that's the lowest since July. Petrol prices have fallen about 30 cents at the Bowser. And if you look at what the NRMA is forecasting, of course, those lower oil prices haven't been factored in yet. So we should expect to see further declines over the next few weeks. Does that mean no more rate hikes, lower inflation ahead? Yeah, possibly. I wonder, paradoxically, with lower fuel prices, maybe more cars will actually get back on the road. But I guess there's other factors here too. Electricity prices at the wholesale level have been falling, and we're just starting to see some discounting offers underway. Justin Fabo, economist, has highlighted this. And I think actually just on the day of recording, Chris, the US has gone for a massive pivot. I think interest rates on hold. The dot plot of the Federal Reserve projecting 2 to 4 cuts next year, even more to come in 2025, and market pricing looking for 6 interest rate cuts in the US next year, with the first cut potentially as soon as March, 83% likely. But actually just looking around the world, the Bank of England is expected to cut next year. New Zealand economy looks like it's sunk into recession on today's numbers. Interest rate cuts to come there. So yeah, Australia might be a bit far behind or a bit further behind on this journey, but suddenly we've just had a whole range of good news. Even 6 weeks ago, the 10-year bond yield in the US was 5%. Well, now it's 4%. I mean, that's just happened in 6 weeks. And Australia's 3-year bond yield is back at 6-month lows and dropping away. So finally, it looks like some good news, Chris.
Yeah, I mean, I wonder if the commentators are going to start saying, well, if the US cutting, we should be cutting, because a lot of the argument's been that Aussie RBA rate's not high enough because around the world it's higher. But what happens if they start cutting? Does that mean that we should be cutting? I mean, the oil price is a good sort of leading indicator, I guess. I mean, what's your take on this, Pete? I mean, if we, as households, we start paying less for fuel, businesses start paying less for fuel. I mean, when you're getting your groceries, Woolies pays less for fuel. I mean, do you think this is a really good sign that, the costs for households are going to start dropping, the costs for businesses and for services and products? I mean, products more particularly. But, is that sort of why oil prices matter so much, and why this is a good sign for future inflation?
Yeah, oil prices are important for two reasons. Firstly, because, as you mentioned, petrol is the biggest expense that you actually see when you're driving around day to day. It's there in massive font, 170 cents per litre unleaded. And if it changes, you see it. It's the most visible sign of cost in the economy. So that's one reason. But also, of course, oil factors into production costs as well, all around the world. And it's weird, if you went back to early October when conflict was breaking out, I don't remember anybody forecasting oil prices at $67 a barrel. If anything, people were talking about the potential for a spike. I think what's been quite unusual is that we've had a quiet boom in oil production in the US. I think people aren't really that keen on telegraphing it because it goes against the sort of climate-friendly agenda of the government over there. But there's a lot of oil being produced. Demand is falling generally around the world because of higher interest rates. And, we've just got a bit of a glut happening there. And, it's good news. We haven't had much good news on inflation for quite a long time. And now suddenly just a whole range of things are coming together at the same time. US inflation was just 0.1% in November, and the PPI was flat. So, you can actually say, yes, okay, year on year inflation in the US is still 3%. But if you look at the most recent months, well, the sort of the inflationary pulse has really gone away. And I guess that's what's driven the pivots in the stance. Now, if you look at Australia, yes, we've got interest rate cuts priced in over the next 18 months, but it's a much sort of shallower sort of downturn, maybe a couple of cuts over the next 18 months. But as we've said often before, when the rates start falling, often they go quick and hard. So I wouldn't rule that out either, depending on how things play out over the next few months.
Well, I mean, I think that's an interesting one, right? So what happens if that, anyone can find this if you just sort of ASX tracker and you can just sort of see the forecasted, rates over the next year or two. But I mean, what happens if that starts going, 1% of cuts next year, and that's all over the SMH, and it's on the AFR, and it's all over Channel 9 News, and huge cuts are coming. I mean, how's that that's got to stimulate demand pretty quickly, right? Before those cuts actually happen, people will believe that they're actually going to happen. And so, I think this is what could potentially surprise the market next year, is that people get a little bit of FOMO because they're like, I don't want to get in once these rate cuts happen because I know I'm going to pay higher prices. Still very low stock, and people can't upgrade. That's the reality. People who are in a $1 million house and they want to go to a $2 million house might not have the borrowing capacity to do that. So they're stuck there, and they don't want to do it anyway because of higher interest rates, or they've got, potential challenges with work. And so I think low supplies of good assets is going to continue on all the way through the autumn period next year. And if that story shifts on low supply, it wouldn't take much for that to be quickly factored into prices, and people use all their borrowing capacities and then have to go to a cheaper property, and then that pushes that price up, etc. So watch out for the surprise next year, I would say, at this point, unless this inflation becomes stickier and the whole story reverses. But all signs are pointing in the right direction, you'd have to admit.
I'll go one further than that. I think the bearish property forecast for 2024 will just be wrong. I think if you look at all of the factors, the fundamentals, we've had record high population growth, we've got record low vacancy rates, rents are still soaring in a lot of parts of the country. As you mentioned, listings have been low, pretty tight overall, especially quality listings. I think there has been some selling from investors offloading their sort of worst performing properties, the least preferred in the portfolio, particularly cash flow focused investors. There's definitely been some units being offloaded, but generally quality stock is just so tight. That's why we're so busy, I guess, as buyers agents, because people just can't find stuff to buy and they're outsourcing it to a pro. But yeah, and I think the one factor that's been pulling the other way all year has been interest rates going up. But if that story changes, the narrative changes, and people start thinking, well, cuts are coming over the next year, I think that the downturn predictions will just prove to be wrong, basically. So, look, as always with a disclaimer, could be wrong, but that's what I think anyway. Chris, on the third story. Now, this is something we talked about some months back, a population growth pushback emerging, not just in Australia, but around the world. So Australia, it was reported over the weekend just gone that Australia was going to announce a new migration policy this week to bring down population growth to a more sustainable level. It's interesting how, to me anyway, just how many countries around the world like Canada and New Zealand and the UK and Australia, we've just been tracking almost in lockstep. We had the sort of population growth basically stalled for 7 quarters in Australia, and then it's come absolutely rocketing back. We've got record high population growth in Canada. It's over 1 million. UK all-time high population growth. I think net migration there was about 750,000. Record high population growth in Australia, ... And Canada is going down the rezoning route, so they're looking to build like fury. Australia's announced the same thing. And but yeah, there's definitely people are starting to get annoyed, frankly, by struggling traffic and infrastructure. There's been regime change, so new governments in where have we had Argentina. We've had a reactionary or populist election victory in the Netherlands and other countries as well. It looks like the UK government's going to get punted fairly soon. Maybe Canada as well, due for a change. So I think, and New Zealand, in fact. So what has the Australian government announced? Well, migration cuts potentially. I think so. Tighter rules for foreign students. I think the AFR estimated potentially 100,000 fewer students than might otherwise have been the case. So there's a bit of a crackdown on English language testing. But at the same time, it does seem like a bit of a fig leaf policy. Because they're going to be fast-tracking visas for specialist skill migrants with 135k plus income. So, yes, maybe the foreign student numbers might be a bit less than otherwise might have been the case. But I think that the thing is, just like with inflation, the year-on-year growth in the population was going to come down anyway. I think the net growth in the number of students was always going to taper off, and therefore year-on-year population growth will fall from 650 to 550 to 450. And the government will look like it's done something, but actually we've still got a pretty high rate of population growth, and a bit of tweaking around the edges probably doesn't make that much difference.
Yeah, I mean, you're right. I think they just want to seem like they're doing something, right? And attacking international students is very popular. Whether they actually do it and whether it makes a huge impact, like you say, and whether it was going to happen naturally anyway, because the universities are full, right? And they can't take more people. And so I think, and then on the other side of the coin, they're saying, hang on a sec, if you're on a decent wicket, you can come into the country quicker, which is going to actually stimulate demand for both rentals and because they're the ones on basically what's happening in a rental crisis. The people who are earning more money are able to push out people who are earning less money, and they're at a bid higher than what the agent wants. Because so it's a. I don't think this is going to do much for anything. If anything, it's just going to bring forward future housing demand by prioritising people who are earning higher incomes. And I think we've got massive skill shortages. I think the whole population debate is hard to argue when we've got, we want to build more homes. Okay, we'll need more construction workers. We've got lots of gaps in lots of different industries, and we haven't got the talent here, and we haven't trained them up through our universities. And so we need these people to keep on growing our economy. And so I think that, and then, in COVID, we saw how there was issues getting baristas and people working in our restaurants and cleaners and jobs that a lot of Aussies don't want to do. And so I would say that, this story is going to continue to be an issue as our country grows, population stories, but I don't think the government really cares. I think ultimately they're just going to keep growing the population because that keeps growing our economy and that keeps them in power. So that's the reality. These are all just, a little Band-Aids on the overall problem, but nothing I believe is going to change longer term.
You made a really good point there. I think the government has really been very hard done by here. A lot of the issues they really inherited from the coalition government. And you rightly pointed out, there was a period there where we had no baristas. There was massive skill shortages across sectors like retail. There were no backpackers or working holiday makers to fill a lot of these roles. We actually needed this snapback in migration. And the number of temporary visa holders has gone, well, it's bounced back by 1 million. But that was actually needed to solve the skill shortage. It's easy to sort of turn around and blame the Labour government for that. But that was actually a requirement. And actually, yes, the population growth will naturally settle back to a more normalised level. And some of this sort of record growth is really just a snapback from the decline that we saw for nearly 2 years there, where there was no population growth at all. So Australia's population will close out the year at about 27 million. So as if the COVID or the pandemic never happened, we're basically back on the same trend that we were on before. But so there's a couple of other changes I didn't mention. So the government will lift the minimum wage for foreign skilled workers to $70,000, but that won't kick in until July 2024, by which time we'll be talking about something else. So I think the UK government, Prime Minister Rishi Sunak, has announced very similar plans. They're going to slash migrants arriving in the UK by a few 100,000, but I guess that's coming from an all-time high, and they're going to do similar things, lifting the minimum pay for foreign skilled workers. So it's intriguing how a lot of the measures being announced in Canada, UK, New Zealand, Australia, that they also almost seem to be moving in lockstep or just almost following each other. But I think a lot of this is really seen to be doing something. And as you said, actually, if it means fast-tracking the higher paid workers, well, that's probably, if anything, a boost from a housing market perspective. So, a lot of similar challenges facing these countries around the world, it seems.
Yeah, and inequality is just going to continue to get worse. That's what's happening absolutely in the housing market right now. The people buying are on higher incomes. And the reason they're able to buy is they've got a lot of intergenerational wealth coming through families. I wasn't in this camp, absolutely not. Passing money down generations, but I just think that it's going to get more and more challenging. Tech's completely disrupting the mortgage broking industry, as an example. We're having to think a few years ahead and go, and 2024 is going to bring amazing innovation with tech. But a lot of brokers are probably looking at that. This is just an example in my own situation and going, oh, don't worry, I'm fine. Don't worry, I'm very valuable. Clients will always use me. My advice is, there's always complexity. Tech can't do that. Whereas we believe the opposite. We believe that tech is going to absolutely change the industry. And if anything, as soon as a new tech gets announced, I'm there. Hey, mate, tell me what you're doing. How's it working? Where are you going? What's on your product roadmap? I want to know exactly where they're going so I can pivot with them. And if more people are moving to the country and they've got skills like what you do, you need to be upskilling yourself. So I think it's all about increasing your human capital for the world that we're building rather than, I guess, seeing it and go, oh, this is unfair. And this is because I don't think the system's going to change. I think you've got to try to outplay the system. And so that would be my take on this, is that it is going to start marginalizing more and more people. Inequality is going to get worse and worse. And technology doesn't enhance equality. It actually does the opposite. It starts to allow people who are in power to leverage technology rather than leverage people. And that's much more efficient. You can see the big Facebooks and tech companies of the world. That's how their profit per person is so higher than a lot of other industries. What's your take on this story, Pete, around population? Do you even like this week, Bernard Salt did an article on population. I do love the demographic guys, and Simon Kustermark makes some great points considering he's a migrant to the country like most of us. There is, Sydney's going to be 7-8 million. Melbourne's going to be bigger than Sydney. Like, this is on pretty conservative growth rates. This isn't like 3-4% population growth a year. Do you think this is really going to be the reality we've got to start to face? Is how are we going to position ourselves in a bigger Australia?
Oh, that's the route we're going down. Whether or not it's the right thing is a whole other question. But, I guess you can always have two different views, what you think should happen and what will happen. And it just seems to be that's the model. I think basically, if you look at demographics, if you went back to about 40 years ago, countries like the UK, where I was a young nipper at that time, the population growth just completely plateaued. And then governments realised that the replacement rate just wasn't high enough. So births just weren't keeping pace with deaths, and it looked like the population was going to roll over. And then since that time, they've just gone hell for leather on immigration. And Australia sort of got on board with that bandwagon, but really ramped it up through the mining boom years. But the interesting thing is, after the mining construction boom peaked, we never stopped. We just kept on going, 400,000. I think that obviously we're not going to keep going at 650,000 plus per annum. It's just not possible to build for that. But I wouldn't be at all surprised if going forward, and in fact you can even see it in the Treasury projections, we're probably still going to run a relatively high rate of immigration. Most new migrants go to Sydney and Melbourne. Some people leak out, I guess, to southeast Queensland over time. But if you project it forward, that's going to take Greater Sydney to 6 and then 7 million and then 8 million in time. Greater Melbourne, the same. Brisbane's growing quickly. So, I do think there's some counter arguments here that people aren't really thinking about, because you're almost completely replacing the incumbent population over time. But, I suppose, Australia's a country built on immigration, and that's the route we're going down. Whether we like it or not, we're going to have big cities, I guess.
Absolutely. And I think, I do think there's going to be a real challenge on housing, infrastructure we spoke about there with Rozelle, but, how they solve this housing affordability would be a big story next year. And, you can already see little leakages coming out very strategically from the governments around how they're going to target, foreign investors and target vacancy and maybe give more powers to build to rent. And, they're going to have to start coming up with some big policy changes next year. But unfortunately, they go back to all the old tricks in the book is, first home buyer grants and first home no stamp duty. And all that does is inflate demand when demand isn't a problem. It's really supply. And so I wonder how they're going to stimulate that. And I think that just really watching this space next year is going to be really enlightening, is how they make some big longer term changes that potentially could unlock a lot of supply.
It sure is. Yeah, I think the traffic story is just going to be an ongoing issue over the next few years. The Western Sydney Harbour Tunnel opens up and the population continues to grow. So just to wrap up on this week, some pushback, I guess, on record population growth, but really the policies announced, they're tweaks at the margin. They're not going to be fundamental changes by any stretch, even if there's some crackdown on foreign student intake or people using international student visas as a backdoor way into the country. But I think, the thing for me this week, the Fed pivot is huge, and falling things like oil prices, fuel prices, electricity prices, all of that's got to be good for the interest rate outlook. And I'll go so far to say, as I think that the bearish property forecast for 2024 will prove to be wrong on that basis. So, excellent chat as always, Chris. Now we're going to have a bit of fun, I think, over the next week or two, doing the retrospective on this year and an outlook for 2024. And I think we've got one more 2 cents to sneak in before Christmas as well, potentially. I can't do the maths in my head. But if you want to catch me, Pete Wargent Blogspots, my daily blogger at Pete Wargent on Twitter. But definitely subscribe for the Rask podcast and send us in your questions. And if you want to catch Chris, it's Blusk where people can track you down too, right?
Yeah, absolutely. The show notes, people would have heard it all before, and the team would absolutely love to help you. It's interesting. A lot of people would think, it's going to be quiet. Everyone doesn't want to, look at their finances, but you've been very surprised is that, this time of year, we're extremely busy, and particularly in January. So absolutely, our team are all here. We are having a decent break. But, if you are looking to get your numbers sorted for 2024, get in touch and absolutely we can turn some strategies around for you and give you some real good clarity on what you can and can't do. So, I wish everyone a great Sunday. And, it's my birthday yesterday, which is, it's not really my birthday yesterday because we're recording this on Thursday, but it is because you're listening to this on Sunday. So happy birthday to me. And I wish everyone a good last week of work.
Beautiful. Thanks, Chris. 21 again. So look forward to catching up next week. Cheers.
All right. Thanks, B. Cheers. Bye.